Here to give us a better understanding of the impact out of the ASX ructions today and whether an international oil price war will benefit Australian motorists in any way, business and financial commentator Peter Switzer. Well, we're hoping you will be the voice of reason here, Peter Switzer, and help us explain what's been a pretty turbulent day on the stock market and whether anyone at home should be unduly concerned. It's not just economic worries, obviously, it's the physical worries of coronavirus, but the market was the real performer today, or underperformer.
Yeah, exactly. We would have thought that the coronavirus was going to be the main issue for the stock market, and we're kind of getting the feeling that maybe the stock market had found an area where it might be near the bottom. And the reason why I say might be because we just don't know what the economic effects of the coronavirus is going to be. But then along came a battle, a squabble between Saudi Arabia and Russia. They call that, the group that Saudi runs in the oil producing countries is called OPEC. And when you add Russia and a couple of other little organisations, they call it OPEC Plus. Well, OPEC Plus have had a big battle. End result is, wait for it, oil price has fallen 30%. So yes, petrol prices will come down, but it really has rattled the stock market big time.
All right, so go back just to put the oil issues to one side, and you know, I have to say I'm a bit cynical. I believe it when I see it at the Bowser. But anyway, put this into some context. These movements today, the falls today, big numbers, 7.3% decline.
Yep.
In terms of where we were in the past with crises like the global financial crisis, where does this fit in?
In terms of the size of the drop, we dropped more after Lehman Brothers failed, and that was a real clincher for the GFC. It really made the GFC threaten a recession. I think what we're seeing now, coronavirus is more a short-term problem that could go on for a while, and the oil price problem, I think, is short-term. They'll eventually come to an agreement, and I wouldn't mind betting that Donald Trump's ringing up the Saudi sheikh and Vladimir Putin and say, what in the hell are you guys doing here? The last thing we need is oil prices to go to $20. And so I think there's going to be a lot of measures that will be, opportunities for this to be a much shorter term problem compared to the GFC.
All right, well, banks were down 5%. 173 companies were down as well. Only 3 were up. Those 3 were Fisher and Paykel Healthcare. That doesn't surprise me. Newcrest Mining and Spark Infrastructure. I suppose the infrastructure movements were ahead of an expected stimulus. Just before I ask you what you think should be in a stimulus if it's to be effective, Westpac's now saying that we could be headed for, they say they're now forecasting, the economy will fall into recession for the first time in 30 years. How believable is that? Good
chance of that happening. This oil problem, short term, could rattle a lot of financial institutions because they've lent to oil companies for their corporate bonds, and if the price is falling, those oil companies are less profitable, therefore the bonds are more risky. So that's a big question mark problem. But I also think that because of tourism being important, education, and of course resource prices really important as well, that could affect our economy. So we're a chance for a recession. March will be negative for sure, Peter. June was always 50-50. After this, it may well be a very good chance to be negative again, and that would be a recession.
Do you think the Treasurer can pull something out of the hat, though? He's got a budget in May, obviously, and he's crafting with the Prime Minister the stimulus package that will be out this week. What do you want to see in it if it's got any chance of staving off a recession?
Yeah, well, the $10 billion figure was a good figure. I was asked by Sky News last week, and I thought, $2 billion for the bushfires, another $4 billion stimulus. But given the fact what we're seeing now, I think $10 billion is a good figure. I think you got your tax cut idea. I'm totally supportive of that. You've got to give consumers money before businesses want to invest, and I think that's going to be critically important.
Just on the consumers' money, I mean, I'm scarred, mentally scarred by the time Rudd sent to those $900 checks out to dead people. They went to dogs, they went to people living overseas, backpackers overseas, of course, would not be then spent in the Australian economy. And we saw a lot of what I'd call low-quality panic spending. School halls didn't materialise for 4 or 5 years and they were grossly underfunded. Pink bats, I could go on. What's the risk here that the money is frittered away, we fall further into trouble, and of course it's not then spent as we want it to be spent, as we need it to be spent?
Yeah, you're absolutely right. It's called helicopter money, just basically sprinkling the money on the economy. It works in the short term, but it's not as good as effective tax cuts, but they take longer to bite or help the economy. So the government's going to be caught between both those two challenges. And what Josh Frydenberg comes up with is ultimately going to be the test of his treasurership, I think.
Yeah, I think you're absolutely right. And we anticipate that will be this week. It could be as early as tomorrow, but we'll see.